Bitcoin. Let's talk about Bitcoin. We need to talk about Bitcoin. Even though Bitcoin isn't shining right now, it's not dull. It's not failing. It's doing Bitcoin things. And so I think it's really important that you tune in if you have any exposure at all to Bitcoin and crypto, and you understand where we're at in the market right now, where it could go, and things that could influence that price or influence the direction the market goes in either direction. So Bitcoin, it is in what the 4-year cycle people would call its bear market. And we are about halfway through the bear market during a midterm year. And I think this is really important to know because this is the control. This is the standard for what to expect Bitcoin to do. However, Bitcoin does have a tendency of sometimes doing the unexpected and moving in ways that people are like scratching their head like, what? What's going on with that? Okay, so right now, Bitcoin's at $73,000 to $74,000. It is freshly off of getting rejected by its 200-day, I think, EMA, right? And that has been something that has happened in previous bear markets where it has entered into the bear market, and we entered into that in October. There's the October 5th, 6th peak, about 126K. And then we had the big crash on October 10th. We had a rally up to around 97, close to 100. We didn't really break that at the end of the year, right? December 2025. And then we have since put in a local low of around $60,000, which is about 52-ish% down from the all-time high, which is substantially less of a drawdown than other cycles. Other cycles were up to 80%. And I know if we go by other cycle projections, we would expect to get a drawdown, into the mid to high 30s, maybe low 40s, to be in alignment with other cycles, okay? And we would expect that a potential real low with Bitcoin would likely come in the fall, August, September, October. And this is all based on historical things. This is based on, I said, midterm year. Bitcoin has traditionally not performed well. This is also based on the whole sell in May and go away type deal that is cliche, but can sometimes prove to be true. And so this is all stuff to consider. That according to historical records, like Bitcoin's been around like 17 years. So that we could be shaping up to see lower lows in Bitcoin. And what that does, right, is it keeps a lot of capital sidelined. It keeps people from going full in because they're expecting lower prices. But we do have a flip side on this, is that Bitcoin has, oftentimes when everyone expects something to happen, sometimes the opposite things happen. And there's a lot of people that are expecting it to go lower, to nuke lower, like fast, to go down, and then they'll be able to scoop it up for 30s to 40 to 50K. Or they're expecting that maybe some major contagion can happen. We probably would need to see some wild policies come out, or we need to see some big company blow up. We don't quite have that playing out yet, right? Last cycle we had the FTX crash. We had all of like the BlockFis, all of those companies kind of going out, Celsius, Terra collapsing, all of that kind of contributing to a lot of liquidity being pulled out of the market, corresponding also with that cycle. We don't quite have that this time. And so some people are like, well, we can't really say it's fully a bottom until we have some of that happen, right? Maybe the market has evolved. It is true. We do have larger, more institutional players. I mean, we have MicroStrategy buying up all the Bitcoin they can. We have ETFs. We have things that are in place that are changing the dynamic of the market. But it doesn't mean that history won't rhyme with itself. So keep that in mind when you're thinking about this. But on the flip side, right, and I think this is important. Right now, we're still sitting. We bounced off that $60,000 level, and we bounced up pretty quickly back above the previous bull market's all-time highs, which is $69,000-ish, right? It hung out in that $60,000 to $69,000 range for a while. We're sitting above that currently. Okay, and so we haven't taken that out definitively and stayed below there. So that's something to consider. That's, hey, maybe we won't go down lower. Maybe we won't rush to new all-time highs. We could trend, we could test that $60,000 level again, but will we nuke down lower? I don't know. A lot of technical guys I follow talk about that. Like, hey, until Bitcoin really puts in some serious lows and sustained lows below that $69,000, $64,000, $60,000 level, like we have a good amount of support there to think about. Plus, with everyone being bullish, or sorry, everyone being bearish on the asset right now, that also could be in the favor, because what happens is everyone's bearish, everyone thinks it's going to go down. You could have a lot of liquidity that people are shorting Bitcoin, and that the market makers might love to go and grab with potentially less liquidity down low. Now, there's still some liquidity below, right? There are certain liquidation levels there, but that's something to consider. We also have the Clarity Act that is back and forth, right? It's like ping pong. Just is it going to pass? Is it not going to pass? What's in it? What's not in it? Is it going to have an impact? Is it not going to have an impact, right? Is it a buy the rumor, sell the news event? Who knows? Who knows at this point in time? But we still have movement forward. We still have these big agencies, the SEC and all that kind of stuff, talking about how they're going to regulate this space. And so they move a little bit slower. And you know, with something like Bitcoin itself necessarily hasn't changed, right? That's the key thing, that Bitcoin as the asset, as the network, it's still doing Bitcoin things. It's just people's and institutions and the market's interpretation of how they want to value that asset and that network at that period of time that fluctuates like crazy. Like it fluctuates like spring weather in Colorado, right? Or in the mountains. One day it's snowing, the next day it's like 90 degrees and hot, then it's downpouring rain, then you have wind, like, you know, it's crazy. It's crazy. And that's how the emotions of the market and individuals can move, but it actually doesn't change anything fundamental. And so you really have to think, it's like, hey, is this like short-term stuff, right? Or is this actually something fundamentally shifting from the asset class, or something that's fundamentally broken? At this point in time, we don't have that. I know a lot of people are complaining because Bitcoin is decoupled from the M2 money supply for a while there. It was kind of trending up with that. It's also decoupled from gold, right? Where gold has had a tremendous year in 2025, like massive gains, same with silver. And it's also decoupled from some of the stock market, right? Where the S&P is up at all-time highs, like putting in new record levels. And I think some of that's to do with the AI boom, absorbing a lot of that capital and interest. We'll see how that plays out. And so there's some interesting things going on there. For the bearish camp, people are saying that, well, because the stock market's at an all-time high and Bitcoin is further out on the risk curve, meaning that when we go risk on, right, it gets a lot of attention when low liquidity or high liquidity environments, so low interest rate environments, which we aren't in right now, when those come about, Bitcoin performs a lot better. But in this higher interest rate market where we're seeing inflation push up, right, we're seeing those things that, and we might even see interest rates increase to combat inflation, Bitcoin doesn't stand a chance, right? And this is also overlapping with when it's in this normal kind of bear cycle that it has done historically. Okay, and these people are saying that if we have a correction, which historically going into midterm, the summers going into the midterms, we have had a pullback on the normal equity markets, which were looking like it wouldn't be unreasonable if S&P is putting in all-time highs, that it wouldn't be unreasonable to have some form of a pullback. And if that happens, that will impact Bitcoin even more. That's very possible. A counter argument or counter thought to think about for that, right, is that if Bitcoin's already decoupled, if these things are already put in their new all-time highs, it's like, all right, well then who is selling their Bitcoin in that risk-off environment? Like who's really doing that when that happens? And so there could be a potential to see money flow from some of those overvalued AI stocks, especially when we have, it's going to be a big major event when you have the OpenAI IPO, Anthropic IPO, you have the SpaceX IPO, maybe they're merging with Tesla. So you have a lot of these big events happening that could suck liquidity out of the market. That could create some chaos that we don't know exactly what will happen with that. I know I'm saying a lot of things and a lot of different perspectives, but that's where we're at in the market right now. And so the key thing, because there's not full confirmation of, hey, bottom's in, it's up only from here, right? And there never fully is, but there's also not fully confirmation saying that we are going to go down and hit new lows. And so the best thing to be is just be agile, right? You want to make sure you have cash. Of course, none of this is financial advice. I'm just some guy who talks about stuff on the internet. But you want to make sure you have cash on the side. You want to make sure that you aren't trying to time the bottom or the top perfectly, that you are looking at ranges of these asset classes and you understand the different catalysts and things that can come into play that could shift the momentum of the market either direction. And while this pullback from the 200-day EMA, it lines up with previous bear markets where we went down lower. If we don't keep going down lower, that actually could be a healthy thing. And especially if we're able to push back up, retest that 200-day EMA and break through that, right? That is a stronger argument or stronger case that, hey, we might actually be moving more into this bull market territory. And of course, if we don't get this big, massive pullback or crazy things happening in the other markets, if we're able to end the war in Iran, oil prices are able to come down, inflation's able to come down, and we're able to see potential for rate decreases in the future and more liquidity coming into the markets, all of these things could line up to catapult Bitcoin to new all-time highs sooner rather than later. And now, those are all speculative, those are all things. And so if you're risk averse, right, you want to be a little more cautious. You're not like, hey, we're going to go all in right now. And you probably should never do that. But that's something to think about when you're analyzing and looking at this market. And then, of course, you can also think, hey, how valuable is it to be contrarian? Because the general sentiment is that Bitcoin is not in a bull market, it's in a bear market. It's probably going to go down lower. And if that's what everyone believes, you can take the contrarian stance and say, hey, they're wrong. The 4-year cycle's broken, in part because of the changing structure of the market participants. Also, perhaps because Bitcoin didn't have that big blow off top. A lot of people expected it to go to 150, 180, even 200K this past cycle, and we got 126K. So because it didn't have that massive blow off top, we're probably not going to have this big crash. That's something to think about and consider when you're in these scenarios. And then, of course, I think the important thing to do is just the math on it, right? We're at $73,000. Okay. If we had the big crash, right? That is a big but normal crash, like 2 bear market lows in the next few months. That takes us down, into the, mid to high 30s, low 40s in that range. And so you're like, okay, if I bought some now and it takes my position down, basically 50%, 40-ish percent, 50%, am I okay with that? Okay. And the position to be okay with that is if you didn't deploy all your dry powder. Okay. And on the flip side, it's like, okay, if it goes up from here, or am I okay? And it looks like we're going to be entering into a bull market and we're not going to be putting in these new lows. Am I okay at buying instead of buying now at 73 or buying at 84, 85, right? 90 even, right? Are you okay entering into those levels? And then dealing with that. So just do the math on that and see, right? And with AI these days, it's so much easier to look at that analysis, especially when you consider like, hey, is this a short-term deal? Is it a long-term deal? If you're doing long-term, right, that's one of the best ways to accumulate Bitcoin over time is, keeping your, understanding your cash flow, understanding how much you want to put in at what point in time, and just DCAing and then lump sum buying when Bitcoin dips down low. Right? Those are presenting opportunities. But I say all this because I don't know the future. I actually hope that we break that 4-year cycle and liquidity and interest and stuff returns to crypto sooner rather than later. But I am biased, right? I have crypto education, I have products on that stuff, and hey, bull markets can be a lot of fun. But it doesn't mean that there isn't opportunity in the bear markets, but you just got to understand the risks that you're dealing with and the different scenarios and paths that can play out based upon what's going on. And so at this point in time, I am leaning towards, hey, we could see some new lows. We could see some of that, right? That's the more risk averse thing. But I'm still having some hope and optimism, and I'm prepared for the other scenario if we don't. So let me know what you think about this. Let me know what you think about being contrarian at this point in time, if it's silly, if it's not, or if you're just gonna be like, hey, I'm just gonna ignore this until the fall, and then I'll pick it back up when more of these factors or things that you've mentioned have played out. It's totally fine, totally valid, right? But again, when you do that, some of the opportunity could potentially go away, or you could be perfectly positioned, right, and ready to dive in if there is a big dip and it looks like, hey, that's the greatest buying opportunity that you'll have in a while. So anyways, that is it for this video. Let me know what you think in the comments below and stay tuned for more. Peace.